We want to show you shares of Rambus have been halted at this hour. One of these individual stock circuit breakers was hit after the stock moved higher. It's up 12%, and I gather it is still halted at this hour. We're trying to figure out what the story is, if there's any news developing on this story, but we'll keep you posted. But at any rate, Rambus up 12+% now at $21.60. Mandy?
Well, let's get to our guests. We have Stuart Freeman, Chief Equity Strategist at Wells Fargo Advisors, and Tyler Vernon, Chief Investment Officer at Biltmore Capital. Thank you very much, gentlemen, for joining us. Stuart, let me get to you first of all. We've had a very wild ride for commodities of late, and some were arguing that it was long overdue. At the same time, you've got people maybe starting to price in the end of QE2, and maybe this is just that kind of shakeout. What do you make of what's going on right now? And do you keep on taking risk off the table, or is now the time to buy back in?
I think we'll probably see some softness in commodities for a while. We've had a change here where the Fed is slowing down QE2. Sometime next year, perhaps the Fed starts raising rates slowly. And really a weak dollar has a lot to do with not just the fact that we're adding on debt, but the fact that we have low relative interest rates versus the rest of the world. And as we start to raise interest rates, the interest in commodities and the returns there are going to be less. And
even though the interest rate differential between some of the other major central banks will still stay rather large, even once the Fed starts winding back that liquidity?
They will be, but they'll be going in the other direction. I think the commodity market will care, and I think the gold market will care as that starts to take place.
Tyler, do you think this reversal for the dollar, for the commodity prices, for stocks, is more about our economic situation, or is it more about what's going on in Europe right now?
I think it's certainly about what's happening here. I think now that we're winding down QE2, there's not as much buzz about a QE3. I think that's better for the dollar. It's taking the risk trade off at this point. Bernanke said here a year ago that he wanted asset prices to inflate, and we certainly have that at this point. So I think, now that that's settling back in, it's pushing up the dollar in the short term. It's pushing down commodities. But I think as we get long term, we look at emerging market demand for these type of commodities. We have an unbelievable demand there. Over the longer term, I think commodities are kind of come back, and I think we get more inflation.
All right. We're sorry for the technical difficulties that shortened this segment, but thank you both for joining us. Have a good weekend.
Thank you.